Hi traders, Anthony here. I sent this trade signal here into my Telegram group today. It's a trade that we took. And what I want to do with the video is show you the strategy and show you why this is as successful as it is. This multi-chart layout might look a little bit overwhelming to some of you. You'd be surprised at how simple this is. We have a set of rules or rules of engagement down here. It's as simple as working through 1 to 8 steps and repeating the process. That's all there is to it. The indicators do all the heavy lifting. There's nothing we need to do. Just open the chart. We've got our indicators on here, and I'm going to show you how this could be an absolute game changer for you. If you're struggling to be consistently profitable, watching this video to the end could be one of the best investments that you ever make. And I don't say that lightly. Now I've got an Aussie yen chart open here. This strategy that I'm going to show you in the video would be suited to anything you're trading, whether it be crypto, Forex, indices, metals, commodities, it doesn't matter. Okay, so this is relative to any instrument you want to trade. Our indicators are on TradingView. You can be trading your crypto exchange on one screen or in another browser, and you could be using our indicators on TradingView for your trade alerts over here and for technical analysis. The strategy I'm going to show you is suited to anyone from beginner through to advanced. It doesn't matter. It's one set of rules, one set of indicators. You just rinse and repeat the process pretty much. This is a demo account on TradingView, and I started this for the purpose of showing my members how they can grow or build an account. Let's get into the video. Also, before we do kick off, we have full tutorials on how to set everything up. I do videos mostly every day. You'll be able to join our Telegram group. Links are below. Jump on board and just watch my videos, and you'll learn the process. Practice on a TradingView demo account, get good at it, and see where it can take you. I'm just going to jump ahead here. T1 80%. I'm going to close 80% of this position, and I'll show you what I do with the stop loss. So we can right click here, we can close, we can do a partial close. We've got 100 here. I'm going to type in 80. Okay, so now we have money in the bag. Let's go down to the account, have a look and see what we've closed here. We've just closed $200. So with $200 in the bag, let's adjust the stop loss so that we're in the money, and we're going to move the stop loss accordingly. So let's just pull it down to the cloud. If this stop loss gets taken out, it's going to cost me $55. Okay, we've already made $200. I'm going to be $150 in the money if this stop loss modify gets taken out here. This is now a winning trade, 100% risk-free. So I've jumped ahead here. Let's come back to our rules of engagement. First of all, breakout alert, potential entry on retrace to the mean. Breakout alert. Okay, so we had a breakout alert on the lower time frame. Here you can see on the 1 minute chart, that was the alert. Breakout alert, potential entry on retrace to the mean. So this is the mean, this middle line here. So the retrace to the mean happened here. That was our short. I was looking for entry on the lower time frame. Number 2, must have higher time frame confluence. So let's have a look at that. Higher time frame confluence. So we shorted that. If we open this chart here, we have a multi-time frame indicator. This is telling me that on the weekly, daily, 4 hour and the 2 hour, we have a bearish directional bias. Multi-time frame. The 1 hour I'm not so concerned, that's a pullback. Mainly on these guys here, it's giving me the go ahead. So we've got multi-time frame confluence, then our checkbox 2 gets a tick. We've got the breakout alert and we have multi-time frame confluence. Cannot be or must not be overextended on the higher time frame. So let's open it up on the 4 hour. I'll just back off these colors a little bit. We'll back those off. Okay, it can't be overextended on the higher time frame. So if we're looking for a bearish opportunity, overextended is going to be, see the mean here? This is overextended here. you wouldn't want to short. You don't want to sell here. So we're looking for the pullback into the mean. We're looking for this channel. All right, we have these outer levels and then we have this inner levels. If this pulls back somewhere through the center of this channel here, I'm good to go. As it was, entry was in here. So it ticks the boxes. It's not overextended. This is overextended. This is bullish here. That's a little bit extended, not overextended, but that's the pullback. So we're looking for the opportunity when it pulls back into the mean. We're looking for a short opportunity. That's overextended. We've got this pullback into the mean. We're good to go. So it ticks that checkbox. Must not be overextended on the high time frame. Number 4, trade away from support or resistance into a gap. Trade into a gap. Have a look at it on the 4 hour. Okay, so what we have here, let me just bump this up, is we have our accumulation and distribution zones. This is where the market has done business. The thicker the color, the lighter the gray, the more business has been done at that level. And where you see a dark zone like this, we actually have a gap. You can see up here how light this is here. This is heavy resistance through here, rejected off this level, and now we're trading back through a gap. Our support, key support level, starts down here, and if you look back, you can see. Okay, so we go with these shaded zones. This is overlapping where the market has balanced previously, or where it's consolidated. Accumulation distribution levels, the market's consolidated, it's ranged, and then we've had the market move from these levels. So for example, this level here is a consolidation all through here, this range. If we broke that down into the lower time frame, you'd see a range through here. So this is the range prior to this move, and so you can see how strongly the overlap here, and it picks up previously where the market has interacted at that level, and it overlaps it, and it creates the density in this color here, if that makes any sense. Number 4 is we trade away from support and resistance, and we trade into a gap. So this is exactly what we have here, trading into the gap away from support and resistance. The other thing that we have on our indicators, if I can go down to a lower time frame, is as far as support and resistance levels go, we've got orange lines, we've got yellow lines, and we've got white lines here. Let me just see if I can bump those up and show you what they are. Monthly pivots is white, weekly pivots is orange, daily pivots are yellow. You can increase the intensity of these colors, and then save as default. Right, so we have a monthly key level here, daily level, weekly level, traded up into a weekly here, daily I should say. There's a daily level here. So these colored levels actually go back further than our shaded lines historically. So there is a big level of resistance as far as the daily time frame is concerned. Level D, daily, here. So it rotated here and we've traded down. Okay, so these are important levels. So we've got the shaded zones, and we have these orange, yellow and white lines. So you want to trade away from these levels. Mind you, it did trade down through this weekly level, but see how the market has been trading to this level previously? See here? See how it traded to it? And here, all through here, more or less, and here. Anyway, there's quite a bit of momentum, bearish momentum here, so we've traded through. That's good. Keep it simple. Trade away from support or resistance into a gap. Now, number 5, if the above condition is met, okay, if all of that is met, then entry on the pullback into the mean, right? Comes back to our entry. So here was our thing. There's the breakout. All the conditions are met, and so we're looking for entry, pull back into the mean. That's this line through here. There's our short position right here. The signal fired on the 1 minute, and then if you want to, you can set your trade up on the 15 minute. There's nothing wrong with that. So let's just do that. Just clear everything. Throw that back on there. Okay, we go short. Stop loss above the cloud. Minimum 1 to 2 risk reward. Target 1 is 80%, 0.0819. So you can see the average true range down here. Go to the ruler. What's it saying? 0.0822. At our entry point, that's about 0.83 there. So that's going to be T1. Target 1 right there. 80%. 1 times the average true range, and we can work it off the 15-minute chart, no problem. We're just using the 1-minute chart for entry. We could trade it off the 15, or you could set your targets and stop loss up off the hourly or the 4-hourly. So now everything's set up. You can see my stop losses up here now. Target 1, 80%. So we close 80%, and as I showed you, we closed 80%. We've got $200 in the bag. There it is down there. And then we pull our stop loss down to, say, $50 is the worst case if the stop loss gets hit there. So we're now $150 in the money, risk-free trade. And now we can extend our target wherever we want. We just simply follow the cloud. For example, if this was our trade here, let's just say that was your entry short. Start off with your stop loss here, then your stop loss will simply follow the cloud. And at some stage, if you want to, you can move your stop loss into halfway through the cloud, following price, halfway through the cloud. Or if you want to, then you can pull your stop loss down to above the bottom level of the cloud. Above, within, or slightly above the bottom level of the cloud here. And then it gets taken out here and you've made a ton of money. So let's work out some targets now. Trailing stop loss outer cloud to start with, then trail the inner cloud. Okay, we'll clear the decks. In a nutshell, that's it. So if you wanted to set some targets up, you could even convert this now to a higher time frame, to a 4-hour, and go for more profits. Why not? So let's have a look. See where there's support and resistance. Well, I mean, if I pull my TP up to this level, I'll make another $93. I've already closed 200. If that target is reached, there's another $93. So we have this level as far as T1. We could set some targets. This can be, see, we've already reached T1. So let's call this T2. I'll show you how to set some targets. So that'll be T2. You might want to take partial profits here and then let the rest continue. What have we got down through here? This is all pretty thick. But we've got this weekly right here. So just short of that could be T3. So there's another target if you want to take more partial profits. So you can be closing more. And if we look left here, there's a daily level here. We've got a daily level here. We've got daily levels here. So just have a look, see where you are. What have we got below here? See our white line? That's important. This is all of these indicators are all based on variations of the average true range calculator, including this channel. So this is a level to be considered. Have a look, what have we got left? Well, we've got this range through here. So, we could call that, if you wanted to, a target. Directly off the top of that. We got daily levels here, the bottom of these candles here. That's another level off this daily here, you can see. And then we've got this weekly down here. So we've got specific targets that we can work with. What I would like to do, pretty much, is this. Let's take my target down. We've got a weekly down here. I might go for that. And what's that worth in dollar value? That's another $130 if that gets reached. That's just below these lows here. Where do I think this is going to go? Well, I mean, have a look. Wave 1, 2, 3, 4. Potentially, wave 5 could end up down here somewhere. So let's just set this up slightly above here. What I'm talking about in terms of waves, and I don't want to get complicated, keep it really simple, but think about the market. Impulsive wave 1, retrace. Impulsive wave 2, retrace. Impulsive wave 3, maybe down around here. And then potentially we see a corrective after that. Who knows? Could go anywhere, but this is sort of a thing that a lot of people would be most likely considering. Something like that. 5-wave structure with a corrective. If we set our target up down here, why not do that? And that'll be nearly $5 in the money if that gets hit. So there's no zero loss. Okay? Let's have a look at it on the lower time frame. Let's pull that down. We have a zero risk trade at the moment. So, okay, have a look at it on the 15-minute. We talked about the cloud. Here's our cloud here. Your stop loss anywhere in the cloud. This is the base of the cloud here, and my stop loss is slightly above it, in the money. Why not? If it gets taken out, it doesn't matter. If that rolls over, it's a bonus. So let's leave it at that. Now I can go to bed, or I can go shopping. I can do whatever I want to do. This is absolutely set and forget. Couldn't be happier. Guys, this is my website. I want you to go over to check the testimonials. Go to the store over here. $19.95 a month. It's ridiculous. This is just crazy value. Seriously. 12-month option, and there's other options down there. But here's the thing, look. It's 7-day free trial. Click this PayPal button. You won't be billed. It doesn't bill you. Billing starts in day 7. Try it for a week. See what this is capable of. For whatever reason, if this isn't for you, you can do that. Control that in your PayPal account. Give it a shot, guys, and Bitcoin Skrill accepted. You can contact me. With that, I hope you have a great day. Safe trading. See you in the next video.